Hey everyone, Dan Dog Crypto. I'm back. I was away. I'm going to be dropping some more content. Going to be more consistent. The markets have been unpredictable, but the reasons are precise. When you have certain events that have taken place, as we can see in the crypto markets, are running consistent. The narrative has been created. We know there's going to be some downward pressure. The Bitcoin at 16,882. You have your Ethereum. It's predictable that there's going to be a liquidity crisis. Money's been moving, been taking money out of the markets. But at year end, anyone that has purchased cryptocurrency, because the wash trade rule is not in effect. If you purchase something at a higher price, you may sell it and reduce your taxable event. So this is definitely taking place at year end. But remember, when you believe in something, understanding why you made the purchase in the first place. Cryptocurrency is the present, it's the future, it's the now. Digital assets. Unfortunate circumstances, as we understand, FTX, Sam Brinkman-Fried. So the media has certainly been playing this out. So there's been a lot of fear, and unfortunately, money has been lost. But when you look at large entities, how could such a thing happen? Well, I believe that one person alone can never conspire. Maybe trust could have been the ultimate downfall or the demise when someone has access to unlimited funds. So could have Sam Bankman-Fried be used as the scapegoat, the pawn? Because normally anything to that, like as John Ray, who happened to handle these larger entities, Enron collapses and other bankruptcies, coincidental, he happens to be the attorney that clears his schedule to represent Sam Bankman-Fried in front of Congress. We have so many things, because typically it doesn't happen alone. So could it have been a trust factor? So could he be used as the pawn? Could he be used as the person, the front guy, bringing in a lot of attention to the space, and now the demise and the collapse? Trust could be the ultimate down until you actually get him in front of Congress or potentially explaining his side, how things could have happened, because you're dealing with code, and then ultimately how these funds get handled. There could have been a person from within, because there's others that haven't been brought to justice. It's only him. So typically it doesn't happen alone. When something to that extent or corruption happens, it happens on the larger level. When deceptions happens, people can use the law to deceive. So not everything that you see or hear should be held as a true testimony, but definitely money was lost, and it's unfortunate for anyone or any of someone that is a smaller player in. Anyone that's a larger player, it's a drop in the bucket, because what happens is, in order to pass laws, implement laws, try to get taxes or law put into effect, you have to work with lobbyists. It comes with a big cost. So the cost factor here is there will be regulations. Coincidentally, we do know that we have an executive order 14067 that has gone into effect. This executive order was signed on March 9th, 22, And this is the executive order, which is the development of digital assets. So President Biden put this into effect, that it potentially becomes a security risk, but to have the United States and investors protected. But this is the development of digital assets and securing digital assets. But this is securing a CBDC, so centralized, certainly on and off ramps. But this is creating and testing CBDCs. So that is definitely in effect, and it has and is in the process. So we know that cryptocurrency, digital assets, that the United States is testing and all these effects. So it's Executive Orders 14067, how this technology is used, how we spend. So the majority of people don't understand digital assets. Information and money move simultaneously. So that's data. So CBDCs are coming into effect. President Biden has signed an executive order. Other central banks are developing CBDCs. So understanding that that is in effect, and certainly moving forward when it launches. We don't have an executive date. We have certain cryptocurrencies which are ISO 222 compliant. We know CBDC are testing on steel blockchain. So a lot of this is been in effect. So it's nothing unusual. And now you have that Sam Bankman-Fried, the collapse that brings cryptocurrency or digital assets to the forefront for regulations, where we have exchanges that now proof of reserves and funds. So again, it's all about regulations, controlling and also protecting investors. But more importantly, CBDCs will be in the future. So more education on digital currency and the importance of digital currency. But the markets have been flat. As you can see, they've been driving down all these top cryptocurrencies. But which ones? Where did they survive? How does it occur? What happens here? Well, understanding what happened. So we have events in the world, but the most important is inflation. So we had massive inflation, so we save money printing. But you have to understand that when you hear the media, again, it talks about inflation, but you have types of inflation. You have a cost push inflation. Cost push is when you have a supply chain, and within the supply chain, and you push the supply chain, disruptions in the supply chain. So we had COVID that occurred. So there was a disruption in supply. Is it labor shortages? So is it shortages in material? So this is felt through the chain. So it's pushed through. So inflation dramatically starts to come in. Then you have demand pull inflation. Is it on demand, where you're actually spending and you have to have something before it goes up? But cost push inflation, your basic necessities have gone up. And what's happened? Yes, we had COVID, we had excess money, but we had disruption in supply chain. We have China. Do we have a decoupling between China and the United States? So there's certain things that are happening globally. So we must understand that what's causing the inflation, but what we also have built-in inflation, where then this cost push naturally works its way through and becomes built-in inflation. So the Federal Reserve, what they're trying to do is control inflation, but they're trying to control demand. That is one thing that they can control, but they don't produce oil, they don't produce minerals, so they're trying to break demand to slow inflation. But we've had many things with the war in Ukraine, so that is causing an effect and uncertainty there. We've had an executive order, excuse me, from President Biden 14066, which is with Russia and energy. So energy is the backbone. So we have all these events that have taken place, that there's liquidity being taken out of the market. There's a slowdown because in order to get credit or create this money, you have to create that. So what's happened in the market now, we're getting a slowdown. And when you hear an inverted yield, a flattening yield, so typically this yield, you start your 1, 3, 2, 5, and 10-year yields, a progression, right? So the longer you go down this chart, what happens is your long-term yield should be higher than your short-term yield, but it's flattened and it's inverting. So that's predicting something. So these trends with this inversion and these yields, because it's indicating a slowdown. So when you hear these inversions, we had the Bank of Japan that's going to start tightening. They're saying it's just one event. So now these inversion that starts taking place, it's predicting. So that's predicting a recession. 2 consecutive quarters do create a recession, but that has changed. But moving into 2023, there will be a recession because all the indicators are in place. So protecting yourself. We know that the Dow Jones, so again, what's happening here, it's been a little shaky. So these are measuring the indicator of 30 of the top industries in the United States and how strong it is. But there's naturally going to be a slowdown. Earnings are slowing down, so they're going to control costs. So when you have your tech sectors, are they going to start laying off? So the big indicator now is we have a strong labor market. So we can squeeze a little bit more when what happens is you're going to try and break demand. This is what the Federal Reserve is doing, and the lower and middle class certainly feels the pinch. But if you believe in a product, believe in something, you stay with it. So, but you have to understand, where am I putting my money? Again, the yield. Everyone's searching for a yield. And when you're seeing government create debt, they have to sell these debts. So you have these treasury bonds have to be sold. So now as these yields, whether they invert or readjust, it's selling debt. Otherwise, the function of the economies of the world will not work. So when I look at opportunity, so you want a dollar cost average, but you do your homework. And that's why at this time right now, so Pzen, it's 3 months old. It's a new economic economy. Volume is slowly increasing and volume will come in. Well, if I believed in something and believe in it, I start dollar cost averaging, because I do believe that Pzen is an early opportunity. Because as cycles occur, you dollar cost average, I believe it's an early opportunity that as time progresses, and it's held up from where it started 3 months ago. Yes, it may be down, but it's a simple dollar cost average. it's holding. You want to know if you believe in a product, how it works, what it does. Do you dollar cost average into it, or do you add to a position? Because what happens here is when you have an early opportunity, when you don't have whale disruption, and you can create Genesis wallets. So taking a position, so the position ends up being here in Pzen is, what am I putting into it? How do I dollar cost average into it? And can I generate a yield? Well, Pzen at this present time has 2,379 holders early. So any of the 2,379 are truly Genesis wallets. But remember the power of compounding. The goal is to always get a yield. As governments throughout the world spend, they create bonds, and money is put to work. What are they trying to create? Is a yield. So you want to create a yield. So Pzen creates a continuous, it may not be for everyone because they're brainwashed and believe that staking is the only way. It's an alternative too. But what Pzen offers is, yes, it's a Web3 engineered, but it's code. Code is law. So this Pzen economic economy has the ability to produce work, creating a income producing asset. When held in your wallet, you will receive a yield. What's happening here is this 2% pay it forward redistribution. As it occurs, it's creating a continuous compounding yield. So on a transaction transfer, really it becomes a compounding transaction transfer. Volume, the frequency at this rate. So now we cooperatively own Pzen economic economy redistribution, a fair redistribution of wealth as an interaction occurs. Once this interaction has occurred, what is the frequency? If the percentage of your Pzen ownership was 10%, well, you receive a portion of that pool. Well, as a interaction, transaction transfer occurs, you receive your proportion owed because you hold Pzen. Well, as these interactions are occurring, well, if your percentage of the pool is 10%, well, if there's 5 interactions, what did you just generate for only 5 interactions? You received 10% of each pool, but in a day's time, how many times was there an interaction? So it's an economic economy, buy, sell, transfer, pay it forward. The person paying it forward benefits as the person receiving the payout on the distribution. So it's a fair system, and it will always work because at any point what's happening, you're transferring your ownership, and then the ownership, as it transfers, pays forward. It's documented. The EVM, the Ethereum virtual machine, registers your wallet. Well, now it's an asset that you own that creates income. Well, this income, as it's being created, right, we're looking at the price, but we also get impatient because time, wealth takes time. and you're going to be beat up sometimes. You're going to be smacked, and you're going to say, did I make the wrong decision? You start doubting yourself because you start looking at what's in front of you, because you're looking at the market but not predicting moving forward, because these are trends that have occurred over and over again. You have peaks, valleys. What causes it? Economic slowdown with a boom, a peak, a bull market. This is always in its interactions. Most people that do not succeed, whether it's in cryptocurrency or in the market, is because they don't know why they're in. And then what's happened is they react too quickly, don't stay the course, and then panic. Anything you put in, what was the reason why it's there? If you need it, don't invest it. But if you're trying to put money to work for you, the Pzen continuous compounding becomes infinite because of the code. So this distribution that is occurring is continual 3 months into this. But also you have to know it's deflationary. In a deflationary environment, remember what's happening now. Because we're in a deflationary environment, what happens? Because deflation is not good for an economy. The Federal Reserve tries to create stability and bring a balance. And they use a 2% target rate. And they use these numbers. But what happens is the wealthy suffer the most during these deflationary period because assets will come down dramatically. But what happens? What do they have on the sidelines? They have expendable money to be put to work regardless of what is happening. If you didn't move your money prior, what happens is you're in it. But if you're in it for the long run, you dollar cost average. If you believe in a product, you add to your position. What happens is wealth is created over time. And by making a decision, and there may be times that you believe you made the wrong decision, but that's when the error occurs. And that has happened to me early on during the dot-com bubble. The same thing happened, and we had the America Online, and we had EMC Technologies, Cisco System, Intel, and at that time, I discovered it was called Toll Grade Communications, and this Toll Grade Communications was this small little startup that had a technology on the analog lines that anytime any disruption happened, because it's not how it is now digitally, that they can correct and repair and identify a problem. So this thing early, did all my research, but it stayed flat. It slow little distributions. It would go up, down. I think the purchase price at that time was $14. And I held it, did all my work, did all my research. And then I got impatient. And everyone you're hearing the knows, that was the America Online, Intel, Cisco System, Microsoft. And this is just right at that point, even before the Amazons took off, because that was still being developed at that point. And I remember I'm like, this thing is not doing anything. So I had a large position. I sell it on a Friday. On a Monday, it opens up, goes to 30, goes to 65, goes to 120, goes to 325, goes to 425. Does a 6-for-1 split, shoots back up, in 6 months to a year, that was 1.5 million. Whether I would have held or not, at that point, you make your decisions. But being impatient, you have to have patience. And when you believe in something, you have to ride it out, because what was the reason that you were in the first place? Pzen resembles these characteristics of this toll grade. Yes, that was a stock, but Pzen is continuous compounding, and it will continually add. When you continually compound, you're not seeing the beauty of it at this point. But over a period of time, what happens is this grows exponentially. It's a redistribution system that truly develops wealth. But what happens now, a fair redistribution with no whale manipulation, and volume organically enters in it the same way that it was launched. There has been some FUD early on, but because they don't understand what an economic economy is, and they're closed-minded, certain people, and they may have gotten fortunately to acquire some wealth, and they shutting down opportunities for others. Pzen is an early opportunity, and it most resembles that toll grade communications that I pulled out early and lost. This is many, many, many years ago. And of course, I've been in the markets for a long time. Pzen can and will create generational wealth. Do your research. Understand how it works. It compounds on every interaction continuously. The code does not discriminate. It will always do what it says, but at any point, at any time, this yield goes up, does not go down. So anyone who makes a purchase on that transfer, at any point in the future, it will work the same. Pzen economy is growing. Pzen economy moving forward truly will be a reset tool, because it's redistributing, and compounding is what you want. Underestimating the value, and people don't understand it. It has power within it, and Conrad Zen is honest in explaining the power of what Pzen can do. Do your research, toe the line, don't get impatient. If you have an opportunity, learn about it, but share it. Because why keep it a secret? Opportunities come and go. The should-have, could-have club is not a position that you want to be in. I'm going to drop more content, try to help during these times. I'm a strong believer, believe that Pzen definitely is an early opportunity. As we share the benefits of it and more expansion occurs. There's a lot that can occur, a lot that can happen, but don't be misled by what is happening. Because yes, the market is doing what it's doing. It's natural, but the storm will pass. Now you do your research, put it to work, allow it to grow. And as a market peaks and enters into a bull market, all of a sudden, potentially life-changing results. Wish you the best. Talk to you soon.